Hello, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have Dirk, the CEO of Atlas Engineered Products. Before we get started, I want to remind all participants that your microphone has been muted. And at the bottom of your screen, there's a chat feature, and we encourage the audience to ask questions by using this feature. Atlas Engineered Products trades on the TSX Venture Exchange under the symbol AEP and on the OTC under the symbol APEUF. The company is trading at 30 cents with roughly 58 million shares outstanding, or about an $18 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, thanks, Trev. Yeah, happy to have Dirk Maritz here. Dirk runs Atlas, and for all our SCD subscribers, you all know that we are big followers of the company. We're also significant shareholders of the company, so we wanted to make sure that that's disclosed. We thought it'd be an opportune time to bring Dirk on board here, as obviously there's been a lot of sort of changes within this industry and a lot of industries due to COVID, so we really wanted to catch up and see what Dirk can tell us. So Dirk, welcome. I want to really thank you for taking the time today, and would love to start off, as we usually do, by asking you to tell us exactly what Atlas does.
Good afternoon to everybody. It is definitely my pleasure to be here. Well, Atlas Engineered Products, or AEP, as we refer to it, is a company that is in the building components industry. We're a high growth company. We is on a mission to consolidate a multi-billion-dollar industry. Our track record is showing and demonstrating some of that growth, and we continue to do so into 2020, 21, beyond, and like I say, on a mission to do that. The story started back in 2017 when we listed the company on Toronto Stock Exchange. The business has started acquiring at that point in time, shortly after, a number of players in the truss industry. Over the last sort of 18 months, we took the truss side of the business, we built that, we integrated these companies, and the business has grown essentially from back in 2017 when it listed. Pre that year, it was maybe a $6-7 million company, and at the end of fiscal 2019, doing about $35 million worth of revenue. You know, it's a very, very interesting industry in this sense. The industry in Canada alone, well over $2 billion in size, just on the truss side. But there's also engineered wood. Engineered wood is the flooring systems that you put into the buildings. There's also pre-manufactured wall panels. Those are, don't think modular homes. These are for custom homes, for light industrial, light commercial kind of applications. And it is wall panels that typically in the building cycle would have been constructed by means of stick framing with lots of labor on site, now being manufactured in factory controlled environments, manufacturing even custom homes, like I've mentioned, the panels for that, and then handing that over to our client, or we could project manage to erect it on site ourselves. So from that perspective, the business has really grown over the last 18 months into a building component supplier right up to the full lockup stage of the business. Like I mentioned, it's a high growth company. We're growing through mergers and acquisitions, but we're also growing through organically. And from that perspective, we have done a lot of integration to make sure that we grow both the revenue profiles as well as the margin profiles of the business.
Yeah, so one of the things that appealed to us early on when we took a look at your business was that it is probably one of the sort of best sort of opportunities to roll up an industry. You're traditionally buying companies that are mom and pop operations. Usually they have a real issue with succession where they're having a hard time selling their business, and you're able to buy these things pretty cheap. Maybe describe some of the acquisitions you've done and sort of the size of the opportunity just in Canada for further M&A.
You know, when I'm talking about over $2 billion industry, think about it this way. Just on the trust side alone, over 300 different regional players playing in this industry. These are mom and pop. They've built a lifetime around that business. They have strong regional ties, but there's no national player. No one player that can actually support a multiplayer in the construction or residential or commercial built industry. That's the first thing. The second thing is these guys are typically in the size, I would say probably between about $3 to $15 million, with a handful smaller than that and a handful a little bit larger than that. But the vast bulk of these operations are in that sort of a $3 to $15 million sort of industry. Thirdly, being so small and regional players, the kids are now doctors and lawyers and have gone through school. There's nobody that's going to take over the family business. Very low opportunity to actually sell it at a good price, and for the owners to monopolize or capitalize on their lifelong work that they've done. That's where Atlas comes in. We move into these businesses. We give them a real exit to the as they head into retirement, etc., etc. From that perspective, a couple of other elements that's incredibly important to look at is, for example, economies of scale. When you're a small regional player in that $3 to $15 million market in a multi-billion-dollar industry, you do not have the economies of scale to actually drive down material costs. For example, last year we went out on RFP. We consolidated the 6 properties that we had, all of their raw material supply. And in some properties, we saw a 14.7% reduction in material cost just because of combining it. The second piece is just standard workflows. When you're a smaller operator, you're not necessarily looking at the most efficient use of the footprint that you have, the best production flows, etc., etc. So from that perspective, when we started working on those, a couple of examples that comes to play is, for example, our Clinton operations. They increased from the year before to the year after, we increased the gross margins by 77 percentage points, or percentage. There's a satellite. They grew their revenues by 81%, their margins by about 90% over that same period, just because of reduced cost, improved workflows, adding a little bit of technology to the business. So it's really an opportunity for us to capitalize on that and actually grow these businesses to a significant company or country-wide, North American-wide player in this industry over the next number of years.
And now the other point too is that these are really regional operations or geographically sort of stuck where they are. So it's very difficult for competitors to come in and sort of displace these businesses. So there's really a lot of good things to like about the M&A opportunity here. So so yeah, it definitely, and the best part now is that you sort of proven it, right? You've made a couple acquisitions, you've built out the synergies and integrated quite nicely. So now let's talk a little bit about the organic side of the opportunity here, because originally the business was really just trusses, but now, you know, taking the same geographical footprint, you guys have also launched into other products. Maybe talk a bit about that.
Yeah, like I mentioned before, we started off with roof trusses, and most of the properties that we've bought to date was mainly in that roof truss side of the business. Our Nanaimo operations, they dabbled a little bit in engineered wood, but we really gave it a lot of time and focus and attention last year. The result, after we tried that, up to some months right now at this point in time, we're doing up to 50% of our revenue profile is coming off that engineered wood side of things. Great margins and really, really a nice product for us to have. We also have research, developed and commercialized the introduction of wall panels and pre-manufactured wall panels to this system. So now the builder can buy from us from one supplier. Remember that. From one supplier, they can now buy the floors, they can buy their walls, they can buy the roof system that is going on, and we can supply windows and doors to that. It's a full lockup. And people ask me quite often, what is the importance of that, to supply that full lockup package? First of all, speed. I want to cite you an example. The methodology that we're using today is, imagine that you're building a 2,100 square foot home. Typically what would happen is the foundation would be put in and it would cure. And then the builders would start ordering piles and piles of wood. People would, they would then assemble a crew of framers, a very, very scarce commodity, very scarce. And then what they would do is they would start manually cutting up pieces of lumber and start framing up a house. Once all the walls are up, they sheet it on the outside, they install the roof system or the trusses, and then they would do the sheeting. They would fit the front door, the back door, the windows, and at that point in time, we'd call it lockup. On a 2,100 square foot home, that is typically weather dependent, probably an 8 to a 12 week endeavor on that size of home. The Atlas disruption is in that we can probably do that in 10 days. That's a huge difference. Now, think about it. That lockup stage is the first time that money flows on this project. The first time. So as opposed to 8 or 12 weeks to get to that point, you now do that in 10 days. It's liquid for these guys. It's super fast. It requires a lot less labor, which is a scarce commodity in the construction industry, especially with our young kids not going into the trades anymore today. So we're fitting into that space there. During COVID, for example, one of the big advantages that we're seeing from this is that we now can offer a product range that is going up much quicker, much faster with less hands, which is actually spread further to adhere to those social distancing sort of principles that we're looking at. Much better control for the builder. And the quality is consistent. It's manufactured in controlled factory environments. The other question that is quite important in that is what is the potential? Coming back to your question about organic growth, think about this. Practical example, we did a small little boutique hotel just outside of Michigan. It was about a 5-story, if I'm not mistaken, building, maybe about 50, 60 bedrooms. And we supplied the floors, the outside walls, and the roof trusses. No doors, no windows. Now I take you back. $2.3 billion industry is just the roof truss portion of it. That portion of that contract was worth $120,000 US at that time, just supplying those roof trusses. By the time that we supplied the outside walls, no internals, and the main flooring system in this hotel, that grew to a $750,000 US project. That's the multiple that you could see over the next coming years that we're going to organically grow. So think about the model. We buy a roof truss plant, or we buy a wall plant. We add the other products to it. We synergize. We bring in better buying methodologies. Our salesmen are out in the field promoting this a lot stronger. And at the end of the day, what you have is you have a multiple of 4, 5, 6 times the potential revenue growth just on the existing business that we have. And that is what we're working towards over the coming years here.
Mm-hmm. Fantastic. Okay, so you mentioned the word COVID. So let's throw ourselves into that. Obviously, there's 2 things to look at in that regard. One is, how is it affecting the operations of the business right now? And then the second part of that question, do you see opportunities going forward based on the disruption in the industry in regard to COVID?
We were incredibly fortunate, and I am blessed with a really great and dynamic team around me. In the early days of COVID, our group has gone back, and we really started to have a real deep look at how it can impact our business. There was lots of uncertainty whether we're going to be seen or be deemed as essential business or anything like that. So we made a lot of adjustments to make sure that we could weather a storm that comes around. Fortunately for us, our industry and what we're doing was always deemed an essential business. So we kept on doing business across Canada. And it's interesting. One thing that came through COVID as well is one of the key strengths of the group was actually our geographic spread. Because we've learned during the COVID pandemic that not all regions are created equally. For example, our Nanaimo operations is absolutely booming. There were some months in which we had the highest level of revenue that we've ever seen through the business, and that during the pandemic. And that is continuing as we speak at this point in time. You go to our businesses in Manitoba, for example. It was, Manitoba was not that hard hit by COVID, but they had a harsh winter. And it's typical that the first quarter was a little bit slower in the building cycle, etc., etc. They still achieved above and beyond the numbers of last year. Going to Ontario, we have 3 operations there. 2 of them closer to each other in Clinton, Ontario, and the other one is actually in Ilderton, which is just outside of London, Ontario. Those 2 businesses, combination of the winter and then a big impact on through COVID, has seen some slowing down, but nothing close to what we were thinking is going to happen in that area. Ottawa, our business just outside of Ottawa, Satellite, they held their own, they achieved, and quite frankly, that market is particularly hot at this point in time as well. So it's that geographic spread. We've done a lot of things. We have from early on engaged our teams to actually look at how we can do this. What were the negative impacts? The negative impacts were suddenly we had to spread people over the production floor versus having maybe guys producing on the same truss table, 3 or 4 trusses at the same time. We sort of cut it down to maybe 2 trusses at the same time, or depending on the size of the truss. And that has caused a little bit of that, plus as social distancing and staggering lunch breaks and all sorts of things to minimize spread and risk to the business. That costed maybe a little bit of a margin impact, but nothing serious. What we've seen at the end of the day was that our cash preservation strategy has actually helped us through these months to make sure that we're actually maintaining and even slightly growing our cash reserves through these periods. So it's at the end of the day, going to be a fairly good success story. Coming to the second part of your question, it is an absolutely incredible time to look at mergers and acquisitions. And I don't want to, on the back of a pandemic, where so many people has been so hurt and devastated by the spread and the human impact of it, just appear as if we're capitalizing. But valuations are really at a really good point at this point in time. You know, you're looking at industry players that maybe would have looked at a multiple of 5 or 6 to be paid a short 6 months, 7 months ago, is probably now looking at maybe a multiple of about 3.5 to 4.5. That makes a big difference on how you finance these acquisitions, etc., etc. So there's lots of opportunities. There's also lots of strategic partnerships for me. Suddenly, discussions that a year ago would have been frowned upon is really starting to develop. And then if you follow globally what has happened in the construction industry, you've seen in China buildings going up at record speeds, etc., etc. You've seen some of that across the globe, how people actually acted and reacted. It opened a number of opportunities for us to look at other types of technologies and so forth to continue building the business going forward. So it's really from that perspective an opportunity where I believe we may actually see a little bit more consolidation in this industry and a larger appetite to do so.
And is part of the sort of trend, I mean, we saw a little bit of a pickup, but you touched on it a little bit, is that, you know, instead of having a job site where you've got a bunch of framers running around putting stuff together, I got to imagine that the COVID sort of trends are forcing contract or developers to look at more modular type of construction anyways. Are you seeing that happen faster?
I think when we look at the data and some of the research that's been done on this, there's an indication pre-COVID already been that most of the medium-sized to larger-sized builders were looking at over the next 3 to 5 years to move a lot more work off-site into controlled factory environments to versus what they're doing today. There's a sheer appetite for that. And remember, this is not a new technology. In parts of Europe, up to 85% of wood construction are already done in modular form. And we're not talking modular homes, we're talking custom homes and all sorts of things. Now, so the trend was there. What COVID has done, it has created an urgency to get more of it done. Mm-hmm. And I think that it's premature in the middle of the pandemic to actually say what's the immediate impact right now. But I can tell you categorically that from discussions that we're having, we're seeing that there's going to be a lot more of that coming over the next months. And I would say probably 2 years, and at a much higher urgency than it was 6 or 8 months ago pre-COVID. Mm-hmm. to really step the pace up.
Right, understand. Now, probably the one question or concern that comes up the most right now with Atlas is the general trend within the construction industry, you know, to do with, you know, COVID, and are you seeing any sort of slowdown in construction? Not necessarily just to your, you know, affecting your business, but in general, is there lower housing starts? Because I mean, you guys really capture the construction job at its earliest point, where you're engineering wood trusses for permitting. So are you seeing any slowdown in any part of your business or any trends you see in the overall industry?
I can say this, I do not see from the current and projected for the immediate future revenue profiles in, for example, British Columbia, that we're seeing any of that as we speak right now. I don't see a significant impact on that front in Manitoba. Ontario was a little bit different in the sense that during the last stages before starting reopening, for a period of about, I would say, 4 weeks or so, they didn't issue during that period any further permits. They allowed work to continue that was permitted, but they didn't issue. I think there's going to be quite a bit of a catch-up there. That's one side. The second side is a lot of the work that we're seeing right now may have already been permitted, or was projects that was already the funding, financing, and it was far advanced down the line of work for construction season 2020. I think what we're going to see over the next couple of months as this develops is there going to be a slight retraction or not? Right now, I still sort of are cautiously optimistic that the macroeconomic stimuli like interest rate reductions and all those sort of things could potentially have a real positive impact on housing builds and housing starts. I think there's a lot of uncertainty about commercial at this point in time. People saying, but you know, we've now actually seen and tasted what it tastes like working remotely, and maybe we don't need all these offices, etc., etc. Now, I think it's still too early to actually say that that is going to be a trend, but that is not the bread and butter business where Atlas works and operates today. Yes, we do some of that work, and we started venturing into that, but we're a residential building components manufacturer and supplier. Does that make sense?
Absolutely, absolutely. You answered the question perfectly. I want to go back to something you brought up earlier, that when you buy a company, typically it's a mom and pop operation that's sort of run sort of not necessarily the most professionally. And now I appreciate there's a lot of things that happen when a small mom and pop company gets put up for sale, and typically they don't think about optimizing the business or improving technology. They're really trying to sell it, so they're not going to go and invest $1 million in operations or trying to get cost savings. When you buy one of these companies, and now that you've done several of these acquisitions, give me a sense of what kind of savings or efficiency you can squeeze out of a business. And if you can somehow put it in the terms of percentages, that would probably help, even if it's a window. But you understand my question? I really want to get this sense. If you can go out and buy a company that's, you say you're buying it for 3.5 or 4x EBITDA, what do you really squeeze out of it once you get your hands on it?
No two acquisitions are the same. I have to start the answer to this question with making that categorically clear. Yeah. No two of them are the same. And I can take you, I want to answer it both by giving you illustrations from the past, as well as some of what I'm seeing today. I was talking a little bit earlier about Clinton and Satellite and Nanaimo and so forth. You've had our flagship, Nanaimo. During the period that we started really working on the synergies and full scope, managing that business professionally, we've seen in our flagship, that was a very, very profitable business, revenues increasing over the last sort of a period since they listed. What was that? 38%. That's revenues. That is by professionalizing and continued focus on the sales side, adding engineered wood, all those sort of things. We saw margins in a very profitable business increasing by 53%. That is by economies of scale. It is by improving workflows. It is by buying better. It is by reducing costs and removing some costs in the business that does not necessarily belong there. And I can cite a couple more companies in the group like that. Those are the kinds of things that we see. What we're seeing is, think about the structure, mom and pop. And just think about it for a minute. $15 million company, maybe employs 50 or 60 people. The sales relationships are typically held in the hand of the owner. He has deep relationships with a couple of guys. I bought my trusses from Bob, and Bob is the guy that I'm going to supply with, and that I'm doing it. But there's also the scenario where that business has built a deep reputation in that market space, but there's never been a professional sales management of developing that market and strategy. Nobody measured, for example, properly permits versus what we've done, i.e. market shares, call cycles, margin that the guys are actually gaining the jobs at. We have Hari Abbasi, our founding member and pitbull salesman, running around, and he's coaching, teaching, developing, mentoring this sales force into a really, really good, organized, and well executing sales force at this point in time. Huge, huge part of our organic growth that we've seen over the last year or so. You have Gamid Haliwala, our VP of Ops. She's working physically to actually improve workflows, grow margins in the factories, drive the cost down. We've just announced a deal with Tiger, for example, on the engineered wood side, where we're driving costs down to penetrate other markets in Canada on the engineered wood side to the same extent that we've done in Western Canada. She is making those changes to do that. Then you have all the other functions that's coming along. But one of the key things that we sometimes forget, just by nature, this industry, as mom and pop, the guys did not necessarily invest into technology. That's huge. Typically what would have happened is we throw people, hands, labor, and costs to increases in production versus efficiency, speed, and technology. Think about the truss table, for example. You have a truss table, it's 100 feet long. You have to essentially, on this truss table, build a jig in which this 10 trusses for this project is going to fit into. People cut pieces of wood to size, they fit it into the jig, and then they start fastening it on the truss table. It's a slow process when you have to manually set up like that. There's technologies available that can do it literally in split seconds, called auto jigging. And you actually open up another 20-30% capacity on that table for the same shift. Think about, for example, the lasers that we're using in the system, auto eject systems of the tables. All those technologies are available. High-speed saws that can actually cut, label, barcode, all of these pieces of wood. And in the future, albeit that the technology is already available, we may actually even be using automated material handling systems to remove some of the manual labor there. These things are going to be making a huge difference in our margins, because we're not talking about technology that has to be developed, researched, anything. A lot of this is already available in this as well as other industries. And we could take this and we can, and we are busy with actually working on each one of our plants to upgrade and continue to grow. Less hands on deck, less hands on the truss, less hours working on it, and the quality is much better. Give you an example. We bought a highly automated saw from one of our strategic partners last year. It's what you call a blade saw. It replaced 3 saws in our factory. it added 60% capacity to the business.
Wow.
Literally paying it back. That business is booming absolutely today. Okay. And what it's doing is it is taking that technology, adding 60% capacity, replacing 3 other pieces of equipment. That's huge. That is making a margin impact.
Yeah. And I'd say, like, I don't know if very many people know, but I used to be a framer and I used to work in this sort of industry. And the other additional component that people overlook sometimes is the more automation in these heavy industries like this, the more safety protocols are in place, and you actually see a lot less downtime for injuries because there's less hands on a lot of this product. So the automation has a double effect here that can't be discounted. We're getting a ton of questions in the chat, more than usual. So I'm going to try to wrap up my piece as fast as I can and then get to some of these questions. But I'd have to ask, so right now, you're seeing a lot of opportunities in the M&A side. Maybe give us a sense of where, if anywhere strategically you want to go after. Is there a part of the country or maybe even another country that you're looking at more than others?
Right now, we're focused on expanding and solidifying our footprint in Canada to really enforce that national presence. Are there some activities that we're looking at? What I can say at this point in time is yes, absolutely. And I cannot make a formal statement or anything like that, but watch the press because we're going to be busy towards the end of this year and into next year.
Okay, fantastic. And okay, so just a little while ago, you raised some money at a quite opportune time, well ahead of the sort of the market down cycle from COVID. What does your balance sheet look like? What can you tell us about your ability to take on an acquisition right now?
I think we have the financing in place to execute and deliver on what we earmarked for 2020. The trick here really, Paul, is at the end of the day is to time it perfectly. You know, we possibly could have already closed on some deals if we wanted to, but we took the cautious approach in terms of make sure where is COVID going to go, that we have cash in hand. We went on a very, very, very tight cash preservation strategy. And from a balance sheet perspective, the cash that we've raised during the private placement, it is still earmarked to finance what we've planned for 2020. And so it's intact. We have financiers that is working with us to make sure that we can actually deliver on this. So I feel fairly comfortable at this point in time to say that when we're going to do these, we're going to be able to do it with a combination of things such as vendor take back and equity, and a combination of maybe a little bit of debt and a little bit of cash resources, that kind of a thing. So feeling fairly comfortable, and we're heading into that sort of a season starting here fairly soon.
Okay, cool. And interesting too to note that, like, early on when the company was doing acquisitions, it was mostly going and basically trying to convince somebody to sell the business to Atlas. Now it seems like there's a little bit more of the other way around. Some of these acquisitions have seen the success, and now we're starting to see some calls coming the other way that they're interested in seeing if Atlas does want to buy them. But I find that to be a little interesting change in events here.
Yeah, I think so. I think there's a lot more people that is talking to us. I think the nature of the beast was when you have first mover advantage, there's not necessarily a lot of believers, especially amongst the current ownerships, because it hasn't been done before. Right. We've done it. People are actually saying, oh, but we can actually go there, and we do that. But we've also done something else. We've built trust in most of our ex-owners that we're looking after their businesses. We're protecting their legacies. We're actually taking these businesses to a next level. We're creating opportunities for employees. You know, when you look at it, for example, I mentioned some names before, but Gurmeet was in this industry for many, 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 many years. She's our vice president of operations today, and she's doing an outstanding job. We have other people in the group that has actually come through the ranks and has actually stepped up to do some really spectacular things. So I think those are all things that's incredibly important as you're starting to build credibility for people that has put their whole life into a business, to know that they're handing it over to people that care and that is actually going to take the business to the next level.
Yeah, no, for sure. Perfect. Okay, a couple quick questions on just sort of the stock side of things. As Trevor mentioned earlier, there's just shy of 58 million shares outstanding. What's this insider ownership percentage?
I think insiders and employees combined is sitting around that sort of a 35% mark at this point in time. Yeah, I think that's about the number when I last checked.
Okay, perfect. And I wanted to note as well that the last financing was done at 40 cents, and a considerable amount of insiders participated in that round. Is that correct?
Yeah.
Yeah. That's always fantastic to see. Okay, why don't we do this? We'll start taking on some questions. If I think of anything else that comes in my mind, I'll throw them out there as well. But we'll sort of go rapid fire and try to get some of these out of the way. Okay, David asks, do you have any U.S. business? Which I kind of know the answer. You've sold into the U.S. for sure, but geographically, you don't have any facilities in there.
No.
But I do know that you guys have an eye a little bit down there to possibly look at some acquisitions. But really, the only business you're doing is sort of doing a little bit of cross-border selling right now. Is that correct?
Right now, at this point in time, all of our business into the US is export related. All our manufacturing facilities are in Canada. Just think about it. If you're looking at our locations, we're on that eastern side of Canada, right? All our locations are sitting very close to borders there. So we do some of that, but no US specific properties that we own today. That being said, we have a long list of potential targets in the US, but right now our focus remains on Canada.
And I want to, and correct me if I'm wrong, but I also understand that there's a big issue around tariffs on lumber products or raw lumber going into the US. But manufactured product like trusses and wallboards, there's no tariffs attached to that. Is that correct?
There's no tariffs attached to any engineered wood product.
Correct.
If it's lumber, that's for the boys on the lumber side to fight out. The engineered wood side of things, there is no tariffs on that.
That's fantastic. Okay, so David also asks, I mean, who do you exactly sell to? Your customer? It's typically the builder developer, correct?
Well, no. It depends from property to property as well. Okay, but our typical customers are, think about it, lumber yards. Lumber yards would supply the lumber for the original stick framing. They would supply the roof trusses, etc. And they're typically supplying to the smaller and mid-sized sort of a market. It's quite a nice little segment of the market because you're dealing with reputable, strong businesses where there's very little credit risk with the smaller builders, etc., etc., etc. Hence why we can actually maintain such an amazing debtors book. You know, we're talking 30 to 40 days, which is outstanding in this industry. And so that's one segment of the market. Then you move into developers and builders. that does mid quantities. We're talking maybe 10 to 50 homes a year kind of a deal. We play a big part in that. A lot of our customers are sitting in that sort of a space. Then you get very large builders, developers that does big subdeveloped divisions. They build 200, 300, 400, 600 homes a year and more. And some of them are actually playing across a multiple of territories. I'm thinking of one group that, for example, they build in London, Ontario, they build in the GTA, they build in Ottawa, they build in Winnipeg, they build in Alberta, etc., etc. These guys have to work through all these small regional players. They can't negotiate national deals or anything like that. We're now starting to fill that space where we can supply the same quality, the same design capabilities to these guys across multiple of territories. So those are the majority. And then you have an interesting space into which we started working into last year was, for example, the hotel space and that commercial light industrial kind of a space. There's a number of players in that segment that uses wood in its applications, and that's another piece of our customer book.
Fantastic. Okay, this question's come up a couple of times, but what are your Capex plans for 2020? Yeah, simple question.
When COVID happened, part of our strategy at that point in time was altered due to our cash preservation plans. So we've cut down to essential capital spending for this year, and or where it is really required in a business to make a significant move in margin. So we're not going to be spending an enormous amount of capital this year, probably around that $1 to $2 million range, but with extreme short payback periods. If it didn't have an extreme short payback period so that we could see a resulting free cash flow as a result of the investment very quickly, we were just not spending it right now. So we're doing a lot of developmental work to make sure that we can maintain that.
Okay, fantastic. Are you able to give us a sense of what the split is between residential and commercial revenue that you guys generate?
Residential by far is the largest. I would say probably 90% plus is residential.
Fantastic. Okay, AJ asks, what are your current debt levels? Give us a sense of what the debt looks like on the books right now.
Excluding property leases, we're probably sitting in that sort of, I would say about $8 million range at this point in time. Yeah, that's about more or less where we're sitting, excluding property leases.
Leases, yeah. And what's your cash position after this last financing?
I'm thinking that we should probably be sitting at that sort of a $3-4 million mark, around about that sort. But it's very time dependent or whatever the case might be, very fluid or fluid. Like I mentioned earlier, we have that still in hand.
Okay. And then the other question he asks is really, I always try to ask this, but what makes you better than the competition? Why would somebody buy from you instead of someone else?
I'm going to answer it this way. It is novel. It is innovative. It is new. We supply a solution to our clients. We're not a manufacturer. Think about what Atlas is doing. Atlas is positioning itself to be the prime and primary designer of the building. Walls, floors, roofs. It's a combination product that fits perfectly together at the end of the day. It has been designed in tandem. It's huge. The fact that we then can take that and flow that into our factories, manufacture it, and then deliver it to a client, help them or train them to install it or project manage it and do some of that ourselves, that's a huge, huge benefit to our clients.
Mm-hmm.
So from that perspective, our biggest strength and what makes us better than the opposition is the ability to give them that full locker package. And it is definitely something that's growing. On an individual products basis, I think our market coverage, the passion with which our salespeople are actually being led and how they are being coached is really, really inspirational, to say the least of it. Our customers actually feels value. But then a short other little note, and this is just something that came to light during this pandemic that we had. You know, I'm not suggesting that we trained or coached clients, but we worked with them, and we worked together on how we can, on sites, socially distance, how we can work together in deliveries, how we can work together on sites. We shared all the research and the resources that we had through our social media with them, etc., etc. And some of them have actually started using some of the materials that we're doing and that we've been sharing to and with them. Mm-hmm. We're starting talking partnership here, but we're not talking partnership just on a regional basis. We're now talking partnership across a multiple of territories and geographies where customers are trusting what we're doing. You know, we have customers that comes out and say, yes, the plans, design and develop the trusses, sometimes not even asking for a price anymore. I'm not going to gouge them. We will always be fair. And we're not always going to be charging the right prices or whatever the case might be. But what is happening is there's a trust relationship building on a national scale. That's what makes Atlas different.
Yeah, I'd also argue that it's the old-fashioned thing. You guys are able to save them money and save them time. So ultimately, that's your big driver. Is if you can prove that and consistently do that with a quality product, you're going to win business. So good on that. So, and you touched a little bit on this question, but maybe we'll get a little more detail. Michael asked, what are your plans to further automate in 2020?
There is, we are working on plans at our Nanaimo operations to introduce more automation on our truss tables. We have another facility that we're working on where there's a lot of changes on coming in terms of more flow versus anything else. There are a potential saw department that we want to upgrade over the next little while. But then there's also significant equipment upgrades for a project that we'll be talking about in the next number of weeks.
Okay, AJ asked the question that always terrifies CEOs a little bit, but can you guesstimate what your revenue growth might be over the next 12 to 18 months?
That's like putting me on the spot, man.
Absolutely, that's what I like to do.
I think what I can say is this. When we went out for the private placement, we were targeting to have a pro forma revenue profile, organic growth as well as M&A activities included by the end of this year to be sort of in that $70 to $80 million mark. And if all goes well, I think most of that is still on track.
Perfect. And obviously that includes a substantial M&A or an
component
of some kind to get there. Okay, fair enough.
Correct.
Okay, so this is an interesting question, and I understand the genesis of it, but do you feel your share price multiple has to be higher or equivalent to any of the acquisitions you're making. And hopefully you understand what that means.
The short answer to that is yes. I think when I look at my when I look at my share price today, for example, and the multiples, etc., think about a business that, for example, was trading on more or less the same levels where we are now, just over a year ago. It got a little bit of recognition towards the latter part when we started demonstrating quarter after quarter business improvements. Guys, let's just be real here. That improvement was from essentially a break-even EBITDA margin the year before to about a 13% for full year, and we've done that in 1 year. You're looking at, for example, a couple of the acquisitions that we bought, the product development that we're putting in place, etc., etc. I really think that there is, and or there could be, but that is not my decision. It's in the hand of investors to have faith in our ability to demonstrate successful execution going forward. I think what we're going to see is once we continue the demonstration of our execution and hitting some of the numbers that we're targeting, I think our results will speak for itself.
Fantastic. Okay, so Jeff has some good questions here. The current product line you have right now, so you basically said, trusses, walls, floors, doors and windows. Do you see any new products you want to add to that mix?
Yes, but I can't comment to that.
Okay. It sounds like something might be around the corner. Okay, interesting. How does geography impact economics? Are there markets that are better than others?
Absolutely. I mentioned it before. It's interesting that you asked that question, because I just want to go back, for example, to COVID. I mentioned before earlier, not all markets, regions, etc., was created equally. And during COVID, there was opportunities for us to see real low valuations, etc., or very competitive valuations on the pricing for certain opportunities. The inverse of that is true as well. You have different regions with different economics. I mentioned before, Ottawa is red hot. We're speaking there to lots of clients, builders, developers, etc., and they just can't lay their hands on enough to actually carry on. I think with what has happened with COVID, for example, some areas, some pockets in Ontario has cooled down a little bit. We're fortunate that with our locations and where we can distribute to, that we can be in multiple areas supplying different markets. British Columbia, what an amazing story. What is going on here at the moment. Really, in my mind, I am struggling to see any significant sort of slowdown in what we do in any event. Hence our decision to actually put the wall line there. We fast forwarded that project. It's going to be starting, be commissioned here later this month. And they're right now busy installing and commissioning. We're going to see some real markets there. And I think there's definitely some impacts from the regional economies. What that does, on the other hand, is when you're looking at M&A activities, for example, in the markets that's high, you never want to buy at a high. Mm-hmm. Then you want to have a different strategy to enter. Because if you're buying at a high where everybody is making good money, it becomes really expensive to buy, and you really want to sort of buy on the way up. as versus to potential the way down, because it costs you money. So from that perspective, it changes your strategy as to how you want to enter specific markets. Some of those markets we may want to enter, but it may not be necessarily through M&A activities.
Mm-hmm. Mm-hmm. Yeah, the other follow-up question he's got, it relates a little bit to the actual products you're selling are somewhat geographically sort of homebound, or so to speak. You know, these trusses are massive, so it's not like you can necessarily ship them 1,000 miles across the country. You're really geographically stuck in a certain market, so it lends itself to less competition coming in from outside markets. But the other question he's got actually relates to, so on the M&A side, because these are mom and pop operations, how often do you see competitors you know, competing against you trying to buy these organizations? And is there anybody else in Canada that's trying to roll up the industry?
I'm not aware of any other public company that is busy rolling up the industry. On the private front, I know there's a small handful, maybe 2-3 examples that I can think of that owns multiple properties. But I have not seen anyone that specifically is busy rolling up the industry at this point in time now.
Okay, good. Okay, so 2 people have asked this question. You refer to adding technology to these mom and pop companies. Maybe give a little more detail in terms of what you mean by technology.
Technology in this space is on a number of things. One is, for example, let's look at the control environment. It's, for example, operational manufacturing systems, ERPs, all those sort of things that automate the back end side. In the factory floor specifically, it would be automation on the truss tables, like I mentioned before, auto eject systems, auto jigging, the potential of high-speed saws that is batching and cropping. Let me just give you this example. On this specific saw that we bought into Nanaimo, this saw can take the production of the next day, 3 days, or week, or whatever the case might be, and it could maximize out of each piece of lumber with minimum offcut various jobs to be done. In the past, what a truss plant operator would have done, they would have a saw and they would start cutting the 10 pieces for this piece of work, and then they would take the offcuts and say, when can they use it for something else, kind of a deal. This is now auto-cropped, done. But there's another thing, and you mentioned safety earlier, but there's another thing as well. When you start looking at these sophisticated pieces of equipment, there's also things such as predictive maintenance activities and machine health monitoring that is starting to happen. It absolutely helps you to plan for downtime, maintenance time, etc., to make sure that you have maximum uptime. These are the pieces of technology that can be added and is added as we continue to integrate these businesses.
Perfect. Okay, we'll take a couple more questions and we'll start to wrap up here. Now, David asked, do you compete on price? I kind of want to answer this question if I can. I know that when you guys have gone into projects, you've actually, the price of some of these sort of kits, if you want to call it, are actually more than what the customer would pay in typical sort of stick frame, but the value they get on the back end is significantly better, and in the long run, a lot cheaper. Maybe you can describe that a little bit.
Yeah. Again, I want to make the sort of a statement that not all contractors and not all construction sites are created equally. Each one of them are using their own methodologies with its own efficiencies and inefficiencies. But I have contractors that that tells me over the span of getting to lockup, bearing in mind, they don't need to have people on site for 8 to 12 weeks. They don't need to have a project manager, a safety guy, an engineer, an architect to come by, and all those sort of things, extra managerial time. The loss of liquidity and financing, or the postponement of that during that period. Some of them are commenting the overall process is saving them up to 15%. Okay, albeit that the individual component prices is more than the sum total of the materials, etc., at that point in time. I think what you have is the wastage factor on a building site is huge. It is absolutely huge. Us being able to crop in a factory, literally have small pieces of offcuts that's going into a bin, and at the end of the day, makes such a big difference to the overall cost component of that building. And those are the sort of items that is being cut away from the builder. Doesn't need to drive away all the rubbish and the dump and find a place to actually get rid of any of that. We come out to site, you have a clean slab. The boys are taking the components, fit it onto the building, they build it, and there's literally for them no scrap to contend with through the use of this. And where it is manual adjustments that they've made to the building and or the components.
Perfect. Okay, I'm going to wrap up here with one more. Let me think which question here. Oh yeah, a real quick one. How many mom and pop operations are there in Canada that you can roll up? Or how many
that we have or we can?
Oh, no, just how many are there? How many are there? I think you mentioned a number.
Over 300.
Over 300. Okay, perfect.
Over 300.
Yeah, and I imagine the question is in the U.S., you probably typically in Canada and U.S., whatever there's in Canada, you add a 0 to the end of it, and that's probably the number in the U.S. Is that, you feel
it's much bigger even, you know, Paul, you're looking at, for example, just the quantity of people that lives in the U.S. and you're probably talking, yeah, adding a 0 or maybe even a little bit more than that.
Mm-hmm. Okay, perfect. Okay, good. I'm going to wrap up those questions. And what I always do here, Dirk, if there's a message you want everybody to go away with, as far as kind of what to expect with the company, let's hear it. Let's hear that message.
You know, I first want to start off by saying never ever has work been more important. This time where we find ourselves in had all of us, whether we were essential businesses or not, really looking at everything. Atlas was no different and is no different. We did too. The good thing that we have at this point in time is we have an exceptionally talented team. A team that actually understands the industry very well, and then a balance as well with good governance and improving our systems, etc., etc. Atlas is and remain a growth story. There is no value in rolling up an industry if you cannot synergize and integrate effectively. We're busy demonstrating that as we speak. This business is poised for growth, and we're going to continue doing that, keep our heads down, and make sure that we keep on executing on that. The Atlas story is going to continue to grow. Watch the press for details. Thank you.
Perfect. Listen, Dirk, I really want to thank you. I think this has been great. I know a lot of our listeners have been waiting for this interview, so I really appreciate the time you've given with us. I'm going to turn this over to Trevor. Trevor, you wrap up as you always do.
Awesome. Thanks again, guys. Thanks, Paul. And thanks again for your time today, Dirk. Before we sign off, what's the website for your company?
It's atlasengineeredproducts.com.
And if anybody's looking for any additional information about the business, how can they contact IR or contact you?
What they can do is on the website, I think it is info at atlasengineeredproducts.com. The address is there. What happens is we have a dedicated internal resource that, depending on the question, will absolutely totally get back to you and channel it to the right places so that we can get the right response back.
Awesome. Thanks, Dirk. And thanks again for your time, and looking forward to the next quarter and coming updates.
Thanks a lot and have a wonderful day.
You too. Thank you.
Thanks, Zach.
Thank you.
Bye-bye.